All right. What is up, traders? What's up, tycoon? Super excited for today's video. Let's talk about energy. The energy sector looks really good. We're going to break down the XLE ETF, and we're also going to break down some individual names within the energy sector that I think you guys should be paying attention to. So be sure to smash the like button, subscribe to the channel if you guys are new, and we're going to go ahead and hop straight into it and head on over to TradingView. Now, this is a monthly time frame. Okay, so when I'm speaking about energy, I'm really looking at it from a long-term basis, right? And the reason being, if we take a look at where we're at right now. Okay, this green little dotted line is currently where price is right now. We're basically at levels that we were at before the great financial crisis, right? We're at back at like '08, late '07 prices right here, 2007 prices. And the more times you test these levels, the weaker they're going to get, right? You can see that we topped out here right around 101.34. And this is back in like 2013, 2014, we hit those highs. But we're very quickly approaching those highs again, right? We're trying to break out. You can see we've had this bearish channel right here that we've been stuck in really since the end of 2022. And we're starting to break out now, right? This is a monthly candle. We're going to see how September ends and how September closes on the monthly candle. But before we zoom in, I just wanted to show you guys the monthly setup here, right? It's really been range bound and stuck within this range. And now what we're going to be doing is battling the overhead supply, okay, from our previous levels, right? From the previous times that we were up here. This right here is going to be our overhead supply. And if we break through there, okay, I definitely think that XLE can head up to 108.41 and 117.42. Now, again, this is a monthly time frame chart. So, this isn't going to happen within a single month. These aren't price levels and price targets, to pay attention to for the next month. But if you are long-term tech, right, and you're holding tech long-term in a portfolio, energy looks good here as well, right? And we know that typically energy and tech tend to have a little bit of an inverse relationship, and it might potentially be a good idea to start looking at some energy names or the energy sector as a way to catch a little bit of headwinds while also potentially catching the rally in tech, even if in energy, while tech rallies too as well. There's nothing saying that they can't rally together, but we know that typically they do have a little bit of an inverse correlation sometimes. We're gonna go ahead and let's go into Oxy real quick. All right, and I want to show you guys Oxy on the monthly time frame here. This is Warren Buffett's baby. He's been buying in the 60s. Okay, that's where Warren Buffett has been buying. And when we take a look at our chart, I can definitely see why. Okay, just from a technical analysis standpoint, what we have here is known as an inverse bump and run. We have our prevailing downtrend right here, and then we have the bump down in price, right? So we get this aggressive bump down in price. Of course, this is correlated with COVID, the 2020 lows right here, and we've already got through the first trend line. And the way an inverse bump and run pattern works is you're supposed to break through the first trend line, head up to the second one, and eventually you break through the second one and head up towards the top of where the initial prevailing downtrend started. That's going to put Oxy back in the hundreds, right? And we know that Warren Buffett is not necessarily a short-term investor, a short-term trader. He's in things for the long run, and he's been, accumulating large portions of this company. And just from a technical standpoint, I can really start to see why. Now, if this thing really starts to just chop sideways and consolidate sideways, that's still healthy. And what it'll actually do is end up forming a large monthly inverse head and shoulders, right? Where our left shoulder would be here. This would be our head. And then our right shoulder would be this extended period of time, right? So ultimately, a lot of these energy names look really good on a long-term basis. And if we can break out above this trend line, it's very possible that we could see Oxy up close towards that $100 price range, right around 97.90, within the next year or two, if not potentially sooner. Okay, we'll dial down into some weekly time frames here just so you guys can see on a little bit of a shorter term basis. And we're definitely putting in this bottoming pattern right here, right? This is clearly looks like a bottom to me. We're going to see if we can take out these highs now. right around the $67, $66 price area. And if we can do that, then we're going to look to go back up and test that monthly trend line. That's going to put us anywhere from 72 all the way down to 70, just depending on how long that takes. And if we end up breaking below 59.62, all right, there are some, support levels down here, but ultimately we want to own this, right? And I'm speaking from a figuratively standpoint. We want to own Oxy, above 59.62, right around in that $60 region, and potentially put a stop loss below there. Again, Warren Buffett has been buying this company up in the 60s, and really that's been the price point. Again, on the weekly chart right here, what are we seeing? Well, this looks like an inverse, or not an inverse, but a cup and handle forming, right? We have a nice cup, we have a nice handle. If we can break through this simple trend line right here, it's very possible that we get the move, to the upside, again, taking us up towards that $70 to $72 price range on Oxy. If we were to look at our RSI here, remember this is your relative strength index. It seems like we're breaking out, right? We had this initial downtrend, this initial bearish divergence. If you're not familiar with bearish divergence, take a look how we have, a high here, a lower high here, and we're creating these lower highs. But at this point, the price action was making a high and a higher high. Right. So, we're seeing this bearish divergence. And then what do we end up getting? We end up getting, a drop in the price afterwards. And oftentimes when you break through these bearish divergences, that's when you can see potentially a move to the upside. And, what do we see? Well, we broke out, we perfectly retested that trend line, and now we're pushing back up higher, further suggesting and supporting the narrative that we could be getting a cup and handle here and getting that breakout, up to the 70s to 72. So this is definitely one of the ones that I'm looking at. If we go back to XLE, the energy sector, and take a look at its weekly chart, again, we're seeing these bottoming patterns, right? It's showing signs of a rounded bottom right here, nice bottoming patterns. And on the weekly chart, you can see this channel a little bit more, a little bit better. But basically we've been stuck in this range, and this is since October of 2022. So, when the stock market and the S&P 500 bottomed, okay, that really marked the higher low for XLE, and we started creating lower lows, right? And now what are we doing on a more intermediate term basis? We're creating a high here, a higher low here, and a higher high here. If we do pull back and fall back inside of this channel, that's not the end of the world. It would end up putting in a higher low. Okay, we can see the low here, higher low here. And if we do get a pullback back into this range, we're going to be looking to see if we can put a higher low right around the middle of this channel here. But ultimately, we're seeing signs that this is going to be a breakout, right? And so we want to see if we can break out, and we do get a pullback, retest that trend line. 94.85 is the breakout level of our previous highs over here. If we can get above 94.85, 101.34 is going to be that first target area that we're looking at. Now, real quick, if you guys didn't know, I actually started a completely free newsletter. There's a website associated with it too. So it's kind of like a blog, and you can go back and read some of the blogs. But I spoke about energy in today's newsletter that I sent out, going over some of the charts that we went over, that we're going over in today's video. But, if you guys aren't interested in, always having to watch YouTube, and you guys want to get some content that I actually don't put out on YouTube, recently I talked about the yield curve. I also give out free trade ideas and setups, break down the charts and, different scenarios that you want to look for. All right, I highly recommend signing up for that. It's a great way to support the channel and also get yourself some free investment intelligence. Sign up using the link in the description or in the comment section down below. So that's XLE. Again, you can see XLE here also breaking a bearish divergence trend line as price is making these higher highs. We were making lower highs here on the RSI. We ended up breaking through there. We're going to, a lot of times, as I mentioned, that coincides with, a breakout in the price action whenever you see a breakout of these bearish divergence trend lines, right? Take a look at where it broke out at. That's right here. And price has gone up, a very nice amount here after breaking out of that bearish divergence trend line. Another one you can look at is going to be Chevron, right? CVX. We'll break down Chevron, and that'll be the last one really for today's video. But Chevron also doesn't look bad here, right? We're seeing, again, signs of putting in a bottom here on Chevron. We're going to see if we can break our trend line here and really get some momentum to the upside. That's one of the main things that I'm going to be looking for when it comes to Chevron, ticker symbol CVX. If we were to just draw a simple trend line right here, okay, we could even draw it something like this, right? But you can see we're starting to break out of this, a little bit of a shorter term downtrend. If we move down to a daily time frame, okay, and even zoom in just a little bit more, you can see that most recently with the gap up, we did break out of this downtrend here, right? If we were to draw a trend line, from here, right, through here like this, you see that this is our breakout here that we're getting here at the moment. So, very nice stuff happening in the energy sector. A lot of the PE ratios, don't look as bad, in the energy sector here as well, right? If we were to just simply throw on, some fundamentals real quick, right? So we're taking a look at the PE ratio here for, CVX for Chevron. It's at 10.42, right? That's what we're seeing up here, 10.42, right? We can take a look at Oxy and see the PE ratio for Oxy, right? The price to earnings ratio here is also not looking too bad. It's at 10.5, or after its most recent rally, it's at 10.9. Then we can take a look at, XLE and take a look at the XLE real quick and see what the price to earnings ratio is for the energy sector. As soon as this thing loads up here, we can go ahead and see what that's going to be. Just give it a second. Well, I guess TradingView does not want to pull up the PE ratios for the ETFs, but we can see here the PE ratio for XLE is at 8.4. Okay, so from a value perspective, value investors look at the PE ratios a lot and things like that. You look at the PE ratio for the SPY for the S&P 500, it's at 22.73. So that's pretty much where we're going to end the video. Just wanted to highlight energy, talk about some of the charts that I'm looking at. And also remind you guys to sign up for the Investment Intelligence newsletter, completely free, and you can get those newsletters straight to your inbox using the link in the description or comment section down below.